All right. All right. Happy Friday, everyone. The gang is all here. Not yet. Kyle, good to see you. Hello. Doug, good afternoon. Steven. I mean, we have a good gang already. I agree with that. Hi, Vladimir. Good to see you. I definitely agree with that. Lost my voice. Oh, sorry. No, I'm just looking at my platform, letting everyone get in here. It's light, but I know we tend to be that way. Let's just dive in. Officially, good afternoon. Happy Friday. Welcome to the Options Income Launchpad weekly market wrap. My name is Scott. I'll be your host. Do you hear my voice now? You should hear it now, at least. Test, test. Loud and clear. Thank you, Kyle. Um, all right. Lost my train of thought. Now what? Okay, let's do some disclaimers. What we do is for education and illustrative purposes. Nothing is a recommendation to buy or sell anything. We're not brokers or advisors. We don't give personal investment advice. Decisions made from anything we do and discuss is at your own risk. Yada, yada, yada. That's the fast version. Pause it and play it again if you want to see the long version. Let's analyze the market. Let's revisit posture. Let's discuss what we think for trades getting carried over the weekend. I don't think you have many trades on. Do you have many trades on? Maybe you've started to throw some bears on that you're holding, but probably not many bulls. What are we looking for next week? Unfortunately, probably a more negative market. What is our opportunity to this? We keep talking about this. I think we need to spend some time, maybe even Sunday. I'll need to go fast, and we'll build a bear list. And of course, we're wrapping up. Um, what are we wrapping up? Section 6. Hold on, I forgot. But I will go look it up. I will look it up. We're on. Oh no, we're in 7. We're in analytics. Now you should have numbers speaking to you, telling you stories about where improvements can be made. Um, and then you'll take those stories and you'll go to section 8 next week, which is goals. And you'll set some goals and say, I think I can um, lose less money when I'm wrong. I think I can be right more often if I do this. I think I can make more money with my winners if I, right? We're a little bit of the scientific method here. It's not just like A plus B equals I make more money formulas spitting out. We're saying, hey, I'm trying to find ways that I can see patterns and say, ooh, you know what? That happens enough times that if I were to do this, I think I could stop that from happening. Now, what's the problem? We don't know what the butterfly effect may be, right? What are the unintended consequences where we're like, if I do this, then Y will happen? And that might actually be true. But you might also get Z and you might be like, right? You might be like, I think I can take my average loss from 400 to 300. Ooh, that's a big move. And then you achieve it. And then you're like, but my losing percentage went from 48 to 63. And then it's less clear if that's a beneficial move or not, right? Then you're like, wait a second. I don't know. I need to go to now I need to look at my reward to risk and I need to look at my expectancy to see ultimately, is this a path that is interesting and worth pursuing or not, right? And this is where we start making stronger general decisions about our trading. Um, you know, otherwise it would be as if, but basically, if you don't do something like that, you have to ask yourself, what are you doing? Which is the question someone would ask me if I went out and started trying to fix a car. I'd be like, this car doesn't work. I'm going to go fix it. And they'll be like, oh, okay. Yeah. Do you know a lot about cars? No, I don't. In fact, I know, I wouldn't say very little, but a minimal amount about cars, you know? And they'd be like, so what makes you think you can fix it? I'm like, yeah, I don't know. I've got YouTube. I've got YouTube. I've got some ideas. Um, you know, interesting. Now, what would be even worse if I was like, you know what? I'm gonna actually fix two things at once. I'm gonna change all the spark plugs out, and I'm going to change out the catalytic converter. Sounds like I know what I'm talking about, doesn't it? I don't. Well, what's the problem is I may actually have fixed the car when I changed out the catalytic converter and broke the car when I changed out the spark plugs. How do I know if I did it right or not? And that car might still not work. And I might have actually glossed right over the thing that would have worked and then just moved on. And now I'm like, oh, well, it's clearly not those things. Let's go change the muffler. Let's go change the timing belt. I don't know. Could be any number of things. But clearly, having a deliberate mechanism to flag, you know what, this is actually what's wrong. That would, you can see Vladimir said you need a scanning tool, right? You plug it in and hope that the computer that's in that car will be like, oh yeah, you know what, we're getting some error messages from the flex capacitor. Where's everybody? We're having a good time today. No one's here to enjoy it with us. The flex capacitors clearly, yeah, you know what, this is what we are saying for our trading. You need a scan tool, a tool that will tell you the patterns, that will say, oh, you can't make money if your losers keep being that big. And you'll be like, yeah, holy shit. I need to I need to dial those back or I'm not going to get anywhere. And so you do that, and maybe something else pops up. But that's definitely the first place. And you start to use the data, your scanning tool, to say, that's good, but you know what? You need to squeeze more juice out of those winning trades. Okay, what can I do that will help me incorporate that? And that's where you work on trading rules that will help to accomplish that. Okay, yes, that's the stuff we're talking about today. Markets don't look good, y'all. Um, Markets are down. VIX is up, back in the high 20s. It's not strong. Stock sinks as oil seesaws in Iran war jitters. Super Micro co-founder charged with sending AI tech to China. Oh, that's not good. How the Strait of Hormuz closure is roiling the auto sector. Balancing act. Rates get trickier. I have to agree. And it was a desperate support level at that. Let's go take a look. It was a very it was a very desperate support level. I mean, if you draw it out, I'm going to put it like this and have to give it a little extra range to account for yesterday, like barely not, but almost there. Like that was a very tenuous level, and we are absolutely obliterating it right now. So what does that mean? It means my long-term score, we're breaking below the purple. That's going to drop minus 0.25. It means that my short-term score had a lower high and a lower low this week. So I'm pretty sure that's going to take me to a minus 0.5. We were at a zero. It was like we always have a bit of a tendency to orient a bit more bullish, but there's you can't argue where we're at with this thing now. So um I'm fully expecting this. Uh we were at a zero. I expect we were at a one on the long term. I'll pull it up in a second here. I think it'll be at a 0.75. We were at a zero on the short term. I think it'll be minus 0.5. And let's go see what volume looks like here. So no buyers indeed. Let's drop this down. And we have another scoring box, which means we know we're going to have at least above average volume, at least 5%. It's going to probably be another 120, 130% volume day. And we know that it clearly is a selling day. So we will duplicate one of our S's and move it over. And now we're going to see these guys over here drop off. I don't care about this over here anymore. But even still, we're you can see our line is definitely a sloping down line. At this point, I've got 1, 2, 3, 4, 5, 6 sells. I've got one buy and one tie. 6, 1, and 1. I'm at a minus 0.5. Yeah, I don't know. That could be enough to even pull us even one knock lower. So at this point, I think we're going to be at least a minus 1. Now that's without yeah, it's not good. It's really not good. I mean, look, we've been seeing this decline for 8 weeks. So it's not like we've been like, hey, this market's sunshine and roses. We don't think that. We've been more reluctant to pull the trigger. We've talked about, even though I haven't put any official alerts out, we've definitely talked about the openness and willingness for puts. Doug says, put city, baby. We know that a correction is down here. There's plenty of more room for it to drop, let alone a bear market. A bear market's 20%. We should look at that. Let's do that real fast before we go to the VIX. We're at a 7.7 right now, Stephen D. I'm going to trust your math. I'll get exact math here for both the other two. 697 times 0.9. Nope, that's 297. 697 times 0.9. 627.3. That's around here. So you're close to that. Let's see where this thing is. This is now a bear market. 557. Remember, that's not a 200. These are now weeklies. This is a 50-week moving average. This is a 100 week. This is a 200 week. But 557 is down here. If we get down to this point, we'd be like, oh, this is bearish. We're bearish now. There's plenty of bearish potential between where we are and when we would actually give it a technical definition. Yeah, look, there's not much good to speak of right now. Let me go back to that one more time. We broke the purple line. I don't even have a previous line. Let's see if I do. I'm going to go back 5 years. No, that purple is all I have had. We'll figure it out on Sunday. We'll figure it out. Let's go back to 100%. That's a great observation, Kyle. The only thing I hate about this market is it's sensitive to headline risk. Very much a reactive, right? I mean, I keep saying I could see this where, it's almost like they say, oh, we've declared victory. We're done here. And pull out. And then it's reactive to that news. Very reactive to headlines. Very, very much. And that absolutely. We typically look at Fridays as, hey, what are we willing to do now with 2.5 days of that headline risk? For sure. Which is part of why we want to assess, right? If I come in here and I assess that conditions improved this week, I'd be like, well, hey, you know what? Conditions improved. Let's hold a couple. But that's not what happened. We're in here saying, hey, this looks like our posture is likely to drop at least what? Well, let's go look at the VIX and then we'll know. There's a higher low. Actually, it's kind of a double. We have this. We had that right there. That was a lower high. High, lower high. That gave us a quarter of a point. Then it came down and turned up, and that became a low. And this was our previous low. That's a higher low. That's minus 0.25. Just to kind of keep it clean and scoring this thing consistently. So we didn't make a higher high. We're at the old high. So I'm going to leave it as what it is. Current score is a minus 0.5. I'm going to leave it at that. If this level holds next week and we fall off of it, I'm going to say, hey, we still have pretty good potential to see if we make it there and then some. And I promise you, that's a market you want to be bullish in when the VIX does something like that. If you're like, oh, was it bullish from here to here? Here's the SPY. Absolutely. Made that move. One of the best moves of the 6-month period right there, right? So again, I'm gonna be more on the bearish end of neutral, but still willing to go from there. I don't know. Okay, so VIX stays the same. Major market, I don't know. We'll see. I don't know. Maybe we'd go down only 3/4 of a point, down to a -1. Down to a -1. And that -1 is the bearer, towards the bearish end of neutral. Yeah, it's not good. We've seen worse, but not much. Not many times. So okay. Any questions or concerns before we move on? Let me know. Sorry, I'm trying to get some things dialed in over here on my end. There's my watch list. There it is. All right, let's go look at the carnage. I have major market at 0.25. 0.75 would mean you have both Russell and NASDAQ leading at all three. Huh. Okay. Well, now that should be interesting. I'm anxious to see that. Maybe you're right. That would be an odd one, but could be early sign of recovery. Well, I'm open to it. I'm open to it. I don't think we've seen much in sector rotation, uh, but maybe. Um, uh, uh, so okay, well, let's go look at some stocks together. Does Triple Witch Day play into this? I really don't feel like it has the impact it had 20 years ago. Um, oh, it's not. Oh, so who's leading? Um, now let's see. Russell and S&P. Ah, okay. Um, yeah. So triple witching. Um, in fact, some people will even talk about quadruple witching because of this single stock futures. But uh, it used to be way, way more sensitive because of the volume concentration and monthly options. Large institution hedges rolled all at once. There was bigger forced positioning shifts, so there was much bigger volatility spikes, more directional moves. As weekly options came on, um, that has spread out hedge flows. Um, the way that there's gamma exposure, which is something that the institutional hedging looks at. So there's less of this like scramble for all at once positioning or repositioning. So anyway, it's not really like an impact. It does still have one of the highest volume days of the quarter, especially in the last hour. This is the witching hour. There's still some rolls. There can still be some price distortions. But I don't know. It's we may see a little bit of it as we get to the end of the day, but I would say as of right now, let's go. Let's go to the SPY. I mean, it does seem to be accelerating, and that could be caused, or we may see it recover. So a little bit of a spike there. Um, anyways, okay, let's go through the list. Uh, you can see in today's movement across a lot of stocks that we had the opening range established where it opened and the buyers came in. Um, or even on like this one, it broke early to the downside and then certainly some downside opportunities available for y'all day traders. I just don't do that much day trading. Okay. Alcoa fell apart. Even basic materials, right? Apple down. Archer Daniels is now, this is now down far enough that I'm like, oh, I don't think this is a pullback consolidation into a trade. I think that's a sell off into a let's just watch. Let's be a careful spectator. Um, Applied Materials, Sideways, AMKR. This one looked like it wanted to try, and then we got this tweezer hold. That doesn't look good. Does not look good. Amazon down. APH down. Yeah, we're not seeing much in here. Look at AXP. Financials are real low. BABA beat up on earnings. Bank of America, BCS financials keep pushing lower. Calls on OXY and XOM still in the money. Okay, so yeah, oil, energy, oil still responding favorably to current conditions. Budweiser, I said I didn't like it. Was too much. Never really got much buyers, and then down again. Yeah, sellers are in control. Citigroup, it's trying, but it hasn't done much. Caterpillar, CF has some bullishness, but chopping around, possibly a setup. Ooh, Coherent. There's another one that was like, this thing looks like it wants to. Then it looked like you missed it, and then it just fell apart today. Big, bearish engulfing. This we'll see. We still have 30 minutes. I bet this 8 million. Right now we're at 7.5. Yesterday was, I think we'll see. I think we'll see it. Cisco. You know what? We may even go run ourselves. Here's the deal. A lot of these that are falling now are becoming where you might say, hey, if this market continues to sell off, those are going to be bearish opportunities. Money is flowing out. We can see that clearly. Right? We can clearly see money flow out. Dow. I'm looking for Dow. I think all the way back even to like through there. If we pull back and turn, that was a great trade. Made some good money on that trade. Not a lot of things that are behaving um, predictably bullish. So to catch a good one certainly was nice. Ford is down. GE is down. Go look at, you can see the automaker dilemma. This thing rises up and turns over underneath the 200-day. I would say you've got bearish opportunity developing in that regard. Put city, as Doug said. Okay. GE got smashed. Gold down. GM flat. Google flat. Goldman Sachs, like City, maybe starting to try to stabilize, but certainly not really much pressure from the buyers to speak of. So it's like right now there's a significant lack of where's the leadership going to come from? Who is going to provide the market with a leadership role? Um, that's the question. We don't really know the answer yet. Time will tell. Um, okay. Okay. Home Depot down. Miners are down. IBM. It's a hiccup. It hasn't failed, but the spreads were no good. Certainly did not like those. Intel, I was like, ooh, this one looks like it could be. I'm gonna give it that same if it can hold and not drop below this. My theory, holds. Today's an ugly day. We've seen a lot of that. But overall, I would say still an opportunity for us to try to see if this makes something of itself. Small caps down 2.75% today. The Dow is only down 1.25. So that's a big drop by small caps who we've been sort of anchoring, and that's something I've said that I'm concerned about. I don't like anchoring a major market bullish score, which for me is only a 0.25 to small caps. If it was only technology, I'd be like, I'm fine with this. Definitely a 0.25 strongly. But this one for me, I don't love it. Lumentum up 10% yesterday, down 11 today. Oh, that's why I'm like, I don't think that I have the stomach for that thing right there. Lamb Research, big comeback, but stalling now. Not much going on there. MasterCard is down. Meta is down. Monster. Morgan. There's a few financials that are just showing these little buds of hope. Not much yet. Not much yet, but there's a little bit there. There's a little bit there. Yeah, right. Kyle says, looking at that, there's a little like stir. Oh, what's happening here? So as we ask the question, who's going to lead? Mike, I'm looking for the stir. Well, right now, maybe financials can move into a position. Microsoft selling off. I don't feel like technology is doing well. You can see there's Micron dropping, Netflix, Com Services dropping, Nvidia dropping. Palantir, it's holding support, but barely. But barely. I don't love it. I may pare down half that going into the weekend. Qs are well down, 2.5% on technology. Rocket Lab is all the way back to the bottom of this little basing pattern, and it's the lowest it's been in the basing pattern. If anyone's still a remnant there, be careful. Stephen, bear call spread, beautiful. You got nothing but Nothing but time to decay. Do do do. Ross stores. Eh. Still trying to hold on to that support level. Good trend. Questionable liquidity. RTX. Again, a lot of people are like, "Oh, defense stocks, the war's on." It's not that easy. Nothing's that easy. You still have to be ready to trade it according to some trading rules. Okay. Finance is down the bottom for first three time frames, moves into a three-way tie, up one notch on the 22. So there you go. The twitch, the stir, the sign of hope, of life. Or maybe um maybe. Okay. Um Sorry, lost my train of thought looking at a trade. Silver down. SNDK. A lot of these have like pretty abrupt reversals today. What the market gaveth yesterday, the market tooketh away today. SPY is all the way down at 1.9%. Let's go see how you can see just a little bit uglier still. A little bit of a volume press there. STX. No, I mean it's not crashing, but there's SYY down, new lows. TJX. Oh, look at that. A little bit of green. Tesla, new lows. Taiwan Semiconductor continuing to push into its consolidation. Um, yeah. Yeah. Okay. VALE miners down, VIK down, VIX. Oh, I clicked on it, it didn't freeze. Amazing. VIX is spiking. We can feel it. We can feel it spiking a little bit there. Oh, I'm so happy about that. WDC, I mean, I actually think there's still a pretty good strength here. Walmart's down. Basic materials are down. Communication services down. XLE up. Energy is up. Financials down. Industrials down. Technology flat. Technology looks okay, actually. All things considered, as I look at this, I'm thinking to myself, oh, you know what? It actually looks okay. Not terrible. Um, so that's interesting. Okay. XLP down. This is Staples. There's not defensiveness, though. We don't see money flowing into Staples. We definitely don't see money flowing into utilities. Healthcare down. So, again, one of the questions that we will ask ourselves is, do we believe that there's a strong defensive realignment, or do we believe that there is broad-based selling that definitely it's not like we're like, oh, well, that's okay, we don't love it, but it's stronger than a huge realignment. That makes me think consolidation. I mean, that makes me think correction over bear market. A full defensive realignment makes me think we're going to orient more bearish market. Has to go somewhere, right? And we're wondering where are they going, or are they not broadly selling off? They're realigning, they're hedging a little bit, but overall maintaining positions. Right? We've still seen the long-term trend hold up. That's certainly representative of some pervasive institutional strength. Uh, and you're right, Kyle. We talk about that around here. But it takes a lot to get where they're triggering. Like, it tends to be like 10. If you ever go read like a prospectus, I hope you haven't. They're so boring to read. But when I first way back when got started, I worked for Fidelity. I worked on the trading desk there, but I definitely had to review through prospectus of mutual fund prospecti prospecti of mutual funds that we had, where it would be like, how much cash, and it's often like 10, 12, 15%, where it's a lot. And so you have to see either heavy distribution requests, which we haven't seen that yet. We have seen some increase of money coming out of retirement accounts, but not at a high enough level that I think we'll see. Great point. That's exactly the kind of like logistical consideration that ends up impacting the market, regardless of sentiment, right? Like, anyways, small group, but good discussion today. Market is in disarray as to where to go from one time to another. The market seems to flip. It's a very, we said this earlier, it's reactive. It's very much news driven. It orients around the Fed. It orients around administrative policy exclamations. It orients around geopolitical events. Very, very much. Then you look at, like, tariffs and inflation, and seeing inflation up even before we get, I mean, right? Inflation was up in February. That was pre-conflict. So yeah, we definitely have concerns. Definitely have concerns about overall conditions, I would say. Okay. We got through everything. Let's go back to the SPY. Any symbols I missed that you guys want to touch on? Okay, a little bit of a buyer's pop, possibly, to end this market. We'll see how much they can get. What am I looking for? I'm looking to build a stronger bearish watch list to be ready if this thing continues to deteriorate. I'm expecting my market posture to drop down to a -1. That's, it's not a great place. We've been there before. We've recovered from it very quickly after before. So I don't think the sky is falling, but I certainly say we're moving into the bearish end of neutral, as a overall condition assessment. I read on the finance tab the Fed was expecting 3. See, I thought I read 1. I thought I read 1. And if you look, that's about all that we have priced in right now. And now there's actually more of a probability to the upside. Do we keep it or raise it? In June, keep it or raise it. July, now we have still a small contingency for raise and a very, very small contingency for lower. September, not meaningful either way. October, this is current right here. So, and then December. At this point, I would say there is zero expectation of Fed on either side. Not zero, but I mean, at best, it's 3-1. And that's oriented more towards a hike than a cut. There's been a lot of talk about like, have they found what should be the normal, right? Like, this is like, hey, this is a good level here. It's not too high, it's not too low. You know, Ugly Don says, yeah, it's not great. It's definitely not great. Okay. Well, anything else that I missed? You guys feeling all right? We'll give you a little time back here. Start the weekend early. We'll meet Sunday morning at the usual time, 11 a.m. Eastern, 9 a.m. Mountain Time, where we will give a full formal assessment and let's commit to it. Someone hold me to it, Stephen. Let's build an initial bearish list. This market, it does feel very similar to the tariff reveal party back in April of last year. I agree. There's definitely a correlation there. So anyway, all right. Thank you, Kyle. I appreciate you contributing and chiming in, contributing to the conversation. Thanks, everybody else. Let's build a Sunday bear list. That's it. That is it, my friend. Thanks, everybody. Have a great rest of your Friday. Have a great weekend. I'll see you Sunday. As always, happy trading.